Welcome to the BNB Investing Podcast for real estate investors. Fix and flippers and realtors exploring investment options with Airbnbs and short-term rentals through acquisition, leasing, or management to generate consistent monthly revenue. Join us for a chat with experienced and successful short-term rental investors to hear their story of how they got started and created wealth by building scalable businesses. We also explore various service providers and lenders that help make our businesses more efficient and maximize revenue in this awesome sharing economy. Welcome your host, Rich Munroe.
Hey everybody, Rich Munroe here with BNB Investing Group. Thanks so much for jumping on with us this week. So BNB Investing Group, we help investors navigate through short-term rentals, whether you're doing a master lease, acquiring properties, or managing for other investors. And we talk about best practices and navigate kind of through the starting point and kind of mastermind on different things for us to look at. And so with that being said, I actually have our friend Kate here today, who's going to be talking about price optimization. You know, it's a big part of the short-term rental business is being able to price your listing correctly. And so I'm happy she's able to jump on with us today. Kate, thanks for jumping on.
Absolutely. Thank you, Rich. Hi, everyone. So nice to be here with you. I think those of you who have been managing listings for a good amount of time have felt kind of the difficult environment that we're in as a result of the economy, as far as, you know, additional supply, difficult traveler behavior, lesser demand. And I think now is, you know, an exciting time to really get into dynamic pricing and revenue management strategies, because there are so many ways to kind of up level and come out ahead even in the current environment. So let me share my screen here and we'll hop in. And as I'm turning the screen around, I will share a little bit around my background. I have been in the vacation rental industry for quite a while now. Live it, breathe it, love it. I worked at Vrbo for about 5 years, coaching on how to be as successful as possible when you list on a site like Vrbo or even Airbnb. A lot of the same strategies apply. I worked at a vendor in the industry focused on marketing to help you acquire more listings. So if you're managing other owners' properties in addition to your own. And then now I get the pleasure of working at Beyond. I've been here for a few years now. Initially was a consultant and customer success manager, and now I'm an evangelist and product strategy expert here. I also have been living in vacation rental since COVID started. So I love taking kind of a holistic approach to all of this. I've stayed in about 60 vacation rentals in the past 2.5, 3 years. Would love to chat about that with anyone here, or stay at your property if it's lovely. I'm in Atlanta and the surrounding area all the time.
That's awesome. That's awesome. So you're basically well encompassed. You know, you've got pretty much all the bases covered with short-term rental models and industry. So that's very cool. So just real quick, for those of you jumping on, if you could shoot me a quick yes in the comments to let us know that you can hear us okay. And then we'll kind of jump into it. So Kate, let's check out what you got.
Awesome. So today we're going to walk through how to maximize revenue, especially in a less predictable and lower demand year. So we'll walk through kind of what dynamic pricing is to begin with. I think a lot of people throw the term dynamic pricing around a lot and don't necessarily know exactly what it means specifically and how that differs from revenue management. We'll talk about the Beyond approach, which really applies to kind of any dynamic pricing tool, other products that you should be thinking about when you're thinking about revenue management. And then for anybody who wants to afterwards, we can always schedule any sort of demo, able to connect directly to any software you might be using and actually demo with you. But wanted to go high level for now and make sure everybody gets the most out of this. So when we talk about dynamic pricing, I like to look at a chart like this initially and kind of get a sense of what pricing used to look like. So this pink dash static line, that's how everybody used to price. And if we're thinking, way back in the day when Vrbo wasn't e-commerce, in fact, it was HomeAway, there was no Airbnb and listings were in the newspaper. And for the most part, it was $200 a night, right? No increase for weekends, no increase for events. It was too complicated. There was no software to support you in making those adjustments. And then once we got a little bit more advanced, we started seeing technology come into our industry. We had the ability to have a line more like this blue line, which is kind of accounting for that seasonality. So the rate's going up when it's higher season, it's going up around event times, like you see that July 4th timeframe or around New Year's, and it's going down during low season. That's still not fully dynamic, but definitely a huge step in the right direction. And so when I'm talking about dynamic pricing, what I'm really talking about is layering in market occupancy to that pricing strategy. So not only what has demand look like historically every single day of the year, and what does that seasonality trend look like, but what does future occupancy look like, and kind of layering in the two of them. I think especially, again, since COVID, there has been no predictability. So it's important to look at historicals, but then also layer in what is the market actually doing right now. And when you start to layer those in, you get a pricing line more like this pink one, right? Periods of high demand, you're going up. Periods of low demand, you're going down. So you'll notice weekends, right? Typically in most markets, including yours, higher demand periods. Wednesdays, less easy to fill, and so the price goes down, right? So this is more of a dynamic pricing line than the blue one. So how are those rates even calculated in the first place? I think Beyond makes it pretty easy when you look at an individual calendar, because you can get a sense of how that rate is actually determined. So March 17th here, for example, we always start with a base price, and really any dynamic pricing tool is going to start with some sort of a base price, a starting point for those fluctuations. Then we have several factors that layer into that. So seasonality, March in this example is not high season, not low season, kind of sort of shoulder season. However, March 17th here is a Friday, which is a higher demand day. So there's an increase to account for that additional demand. And then it's also spring break. So there's an event factor here, adding another $18 for that predicted price of $153. If you're able to see this calendar here too, you'll notice pretty much every day has a different price, because every day has a different likelihood of being able to get booked. And so dynamic pricing is trying to give you the best shot of getting all of those days booked, but also maximizing your rate whenever you're able to, right? So on Saturdays, tons of demand, really great opportunity to be able to drive rate up and maximize on that and get as much revenue as possible.
So Kate, I'm going to kind of throw in, if you could back up to that next slide, just so I can probably ask you a couple questions along the way. And then folks that are watching, feel free to throw any questions in the comments as well, and we'll try to get to those. But so just to kind of get an understanding, so on Wednesday, you're at $59. On Friday, you're at $116. And how much of that decisioning are you basing on actual market activity?
That's a great question. So we typically, the Beyond approach is we're looking exclusively at historical data, looking back last year, 2 years ago, 3 years ago, and now 4 years ago, because as crazy as it seems, 4 years ago is that pre-COVID time. It's wild that it was that long ago that there was some sort of normal. But so we're looking at all that historical data until we get about 6 months out. When we get 6 months out, we start to slowly layer in that future data. And the closer we get, the more we're leaning into future occupancy rather than historical occupancy. More than 6 months out is well outside the normal lead time in most markets. So that's why future occupancy doesn't necessarily mean a whole lot to us at that point. But I will say our algorithm is still taking a look at it. And if we see some sort of crazy spike in demand, way far out into the future beyond that 6 month period, we will still increase rates accordingly and say, we don't know what's going on, but there's a big increase in demand more than 6 months out. Maybe it's a Taylor Swift concert, maybe it's a lunar eclipse.
Right. But just so that we're clear, so within the 6 months, you are actually looking at, like, another way to say it is you've kind of got your finger on the pulse of what's going on in that local market, with not only with pricing, but also supply and demand.
Exactly. Yep. So we are looking at occupancy trends, and we're looking at occupancy in two different ways. One is Beyond Pricing has been around longer than anybody else. So we have a ton of connected users. So other Beyond Pricing users, whether that's individual owners or property management companies. And that gives us the cleanest source of data because we're directly connected to the software. So we know if that's actual occupancy or maybe just some blocks. But then we also scrape the market. So we're scraping Airbnb, we're scraping Vrbo, Booking.com, et cetera. And we're looking at both of those. So yeah, we're getting a true sense of what is going on in the market and how occupied is every single individual day of the week in every single hyper local market.
So just I just dropped from Mars and I've never heard of short-term rentals. When you say scrape, what do you mean?
So we are looking at what is booked and what is not booked for all available properties on Airbnb, Vrbo, Booking.com. Now, the difficult aspect when you're doing that, right, is we're not directly connected to anyone's software. So all we see is booked or not booked. And that booking might be an owner booking. It might be a maintenance block. It might just be a home that's, closed for a while and not renting anymore. So that's why it's nice that we're able to look at both data. So we can look at the entire market of scraped data, and then we're looking at just Beyond Pricing users and kind of combining those together so we get a true sense of what is occupancy actually like every day of the week.
Okay, very cool.
So when we look at how to actually approach this, right? So you have a dynamic pricing tool, or maybe you don't, but you at least have a good source of data that you're looking at. How do you know what to take action on? And how do you not get into a state of analysis paralysis? Because I think there's AirDNA, there's key data, Beyond has its own data component. There's a lot of data out there. So how do you not get down a rabbit hole? How do you look at the things that are going to be most impactful and figure out where to make adjustments? I always start high level from a portfolio view, and I always start by benchmarking off of your prior year's metrics, keeping in mind, last year was an outlier of a year. There was additional demand. This year, a lot of people traveling to Europe, a lot of people impacted by the state of the economy. So taking that benchmark with a grain of salt, I always start by looking at year over year revenue. So in this chart, we're looking at pink line is this year, today looking forward. Purple line is that apples to apples comparison. So it's last year, but it's June 29th of last year looking forward at the next 12 months rather than where last year actually finished. So again, we're looking at true year over year apples to apples comparison here. And in this case, we can see purple line is below the pink line. So we are surpassing on revenue from last year with this specific example. But it's helpful to break that down. Revenue is obviously a combination of occupancy and ADR. So breaking that down, I then like to look at occupancy and get a sense of what does that mean here. Now, all charts within Beyond Pricing typically default to a monthly view. I think it's helpful to break that down weekly or even daily, because in this case, we can see you are ahead on revenue in that last chart, right? Pink line above purple. But in this chart, occupancy is behind for the most part outside of maybe October. And so it's helpful to break it down and say, what does that look like weekly, right? Are there particular weeks that are stronger, like this one here in August? Are there particular weeks that are really driving your occupancy and ultimately your revenue down, like the final week in August? And so it's really helpful to dial in, again, either weekly or daily if you have the ability to do so. And then after benchmarking against your prior year performance, getting a sense of what the market is doing. So just like our algorithm, we also provide two different types of data to our users. When we compare to market within our data component, we are looking at other Beyond Pricing users. And that's because a lot of our charts, we want them to be as accurate as possible. So when we're looking at paid occupancy, we want to give you true paid occupancy compared to the market and be able to pull out any of those maintenance blocks or owner blocks. But we also have several sources within the dashboard where you can look at that scraped occupancy in the market to get a sense of what similar properties are doing. So again, we start by benchmarking against your own prior year's performance, potentially even going back as far as 4 years ago if you've been doing this for that long and you have that data in your software or in your Airbnb or Vrbo account. And then we start by comparing yourself to the market and getting a sense of, well, yeah, the market's down, or, I'm down from last year. Is the market down from last year too? And same as that last chart, are there weeks where I'm significantly underperforming compared to the market that I want to dial in on? Are there weeks where I'm significantly pacing ahead of the market where, that's my success? Maybe I can learn from the strategies that I'm doing there.
So it'll help you decide in certain cases where you might not be raising your pricing high enough by looking at that data.
Exactly.
Or alternatively, you might need to lower it a little bit to get the occupancy back. So it kind of helps you make a decision on which way to nudge.
Exactly. Now, I think the interesting thing now is so many people are using some sort of dynamic pricing tool. I think last I looked at some of the data, it was around 50% of the market is using some sort of dynamic pricing tool. Now, dynamic pricing is going to automate a whole lot, right? Because it's looking at occupancy by every day of the week. It's looking at historic seasonality. But I think the way to up level now, it used to be you could get a dynamic pricing tool and you're way ahead of your competitors. Now it's how do you customize the strategies in there to make sure that there we go.
There you go.
All right. So hopping into how to actually do any sort of strategies, right? You want to look at the data first, but then what do you do with that data? How do you make adjustments? What do you want to adjust? And again, to my point earlier, everybody's using some sort of dynamic pricing strategy at this point, or at least 50% of people in your market. So how do you up level on the competition? Now, again, a lot of strategies like this come as a default if you're using some sort of dynamic pricing tool. And it's important to come in and change those strategies. Do not move forward with default strategies, default templates. So one of my favorite strategies to implement is discounting as you approach availability on your calendar. What this screenshot is showing you is somebody who has implemented a 10% decrease. So if nobody has booked and you're a week out and that calendar is sitting available, decrease the price by 10% to give yourself a better chance of filling that in. And if nobody's booked and you're 3 days out, decrease by 25% to fill that in, right? Now, the important thing to think about here is what is your lead time? And I think right now that's been the most difficult because lead time has been super unpredictable. Rich, have you been feeling that too? Is there like no pattern in when travelers are typically booking your units?
Yeah, I mean, for a long time, as we kind of moved away from the COVID effect, it was literally like a 3 day, everybody's waiting till the last minute to make decisions, right? So in a lot of our urban markets, it's like a 3 day lead time for bookings. Some of the vacation ones are longer than that, of course. But, we've definitely seen some change coming longer now. I'm not sure, but we might have lost you again. Let's see. Let's do that. Okay. Let's give her one more minute. If we're gonna keep getting bumped up like this, we may need to get Kate to come back. But yes, the signal is bad again. Put that in the chat. Give us just a minute here. Hopefully, we can get this situated. while we're waiting, Kate, those of you that the concept of pricing, dynamic pricing, if that concept is fairly new, you may be starting your listing, or you're already up and running with your Airbnb listing. Airbnb has something that's called smart pricing that they encourage you to use, and smart pricing is not going to really help you too much. Airbnb is motivated to generate as much volume as possible, and so when Airbnb is giving you direction on pricing, it's typically going to be based on them trying to flood as much bookings as possible. So what does that mean? It means usually if your price is $100, but Airbnb wants to get it booked, they're going to say, well, our smart dollars. And so it's always going to kind of work against you to use that as direction. And so that's one of the reasons to latch on to a price optimization tool to kind of help you, navigate that decision so that you're not getting a biased opinion about it. So, Kate, I'm just kind of jibber-jabbering, wait for you to get back on. Hopefully, the Wi-Fi doesn't drop you again.
I know. I was trying to toggle off my phone, but it didn't work out here. Can you hear me?
Okay. Yeah, I can hear you.
Okay. I think rather than presenting, I'll just speak to some of the rest of the data, hoping that kind of retains my connection with y'all.
Yeah, sure. So I while we were waiting, I was telling everybody about the need to not use the smart pricing on Airbnb because it's not really designed to do a lot of the stuff you guys do that looks at what's happening in the market.
Yes, absolutely agree. I would say in general, if you think about the goal of the company, Airbnb wants to maintain the most competitive rates. They want to have the most competitive properties, and they're trying to win out over Vrbo, over direct bookings, over booking.com, etc. So theoretically, they are inclined to want you to drop rate and significantly less motivated to encourage you to raise rate when you have the opportunity to do so. Because again, their goal is they want to be the most competitive. They are making money off of fees. They're making money off of your fees, but they're more inclined to get as many bookings as they possibly can rather than find ways to maximize your revenue.
Totally agree.
So I do think it's important.
So you were talking about the discounting strategy.
Yes. So as far as setting up some sort of discounting strategy, I think it's always important to think about when are most travelers booking, right? So if in your market with your portfolio, most travelers are booking, let's say 30 days out, then as soon as you're 21 days out, you have less of a chance of getting those nights booked. And therefore you should start strategically dropping rate kind of in a tiered strategy as soon as you have less and less of an opportunity. So as you're lowering rate, you're giving yourself more of an opportunity to get booked while you have fewer and fewer prospective travelers that might be booking. We also, on the flip side, encourage the opposite, right? So for anybody booking well outside the normal lead time, if you have travelers that are booking 200 plus days in advance, that is way further out than most travelers are booking in the Atlanta market. And so you want to be adding a premium there to account for the fact that you don't know what demand is going to look like quite yet. And those travelers are just trying to lock in your property, probably for a peak season date before you have a concept of what pricing can look like. So I always encourage people to also do the reverse and add a premium for anybody who's booking significantly farther out.
Makes sense.
Now, that, by the way, knowing that a lot of people are using dynamic pricing strategies, say 50% or so in the market, if you are also a traveler, knowing this is helpful, right? So the closer you get to the booking date, the better the deal that you're likely to get. And the same applies to hotels. A lot of this came, honestly, from the hotel industry, and we're just kind of bringing it over to vacation rentals. So hotels have been doing this for years. But if you're trying to take a last minute stay, you'll probably get a great deal.
Well, I think the whole concept's been widely term rentals apartments, for example. I think some of our groups now have the price change every hour for a long term.
Yep, absolutely. Constantly adjusting, constantly keeping up with what's going on in the market. We also scrape hotel data so that we're aware of what they're doing. Sometimes they'll pick up on things before anybody in the short-term rental industry does. Now, the other big concept that I wanted to share today as well is around minimum stays, because I think so many people don't think about that as a part of your revenue management strategy. And minimum stays very much influence how many searches you are showing up in the first place, which influences how likely you are to get a booking. So if you're requiring, say, 5 nights over Thanksgiving, and most travelers on Airbnb or on Vrbo are searching for 2 nights, you are missing out on a ton of searches, and you therefore have less of a chance of getting booked. So the other strategy that I like to play around with Within Beyond, because we control minimum stays as well, is what are most travelers searching for in your market? What do most of your competitors have as their minimum stay length? And then similar to those discounts, you can go out with a strong minimum stay requirement and tier that down when you have less of an opportunity to generate a booking, because again, you're getting more visibility with the lower minimum stay requirement.
So back up a minute for me, Kate. The insight to know not only what other folks are using for minimum stays during certain time periods, but also what people are searching for.
Yep, exactly.
Did I hear that right?
Yep, exactly.
Okay. That's pretty powerful.
Incredibly powerful. That is actually the newest product that Beyond recently developed, which is called our Pro product. And that's layering in that search demand data so that you can make the most proactive strategy decisions rather than just reactive. I think, if you're basing all of your strategy on what travelers are booking, you are ignoring the fact that there are a lot of travelers looking on your website or looking on Vrbo or Airbnb that did not actually book, and everybody's missing out on that component of the data.
Very cool. I like it.
See, the other aspect of Pro, by the way, that I think is the coolest, actually, there's several components there, but the other is actually powering searching off of that as well. So rather than just looking at what the market's done historically and what the market's doing looking forward, that's all based on confirmed bookings in the market. But it's also helpful to layer in where are searches coming in. And I think my favorite example of that is the Super Bowl when it was in Arizona, right? Everybody said there's a big event, I can raise prices, but not necessarily looking at, are the searches keeping up with my anticipated demand? Am I leaning into data here, or am I just listening to my gut? And I think that's kind of the biggest difference between using a pricing tool or not. I like to call it the ceiling method of, you listen to your gut, you look at the ceiling and you say, well, it's Super Bowl, or well, this event's going on and I think I can get $400 a night, rather than looking at the data and saying, well, there's no searches for that date, or the market's not occupied on that date, and having that price displayed accordingly.
Yeah, we went to that issue the last time the Super Bowl was in Atlanta. Everybody's basing their pricing off of recent previous Super Bowls had done, which most of the time were at least 10 times the nightly rate. And so a lot of the hosts listed 10 times the nightly rate Super Bowl, and literally, didn't get any bookings because the makeup of the teams that ended up coming to Atlanta, a lot of them ended up being teams that weren't, the folks that weren't necessarily going to stay in Airbnbs, and that lived fairly, within driving distance. So people were paying maybe 3 to 4 times, but not 10. And so what happened was you had a lot of hosts that listed it at 10 times and sat there empty, literally up until just before the Super Bowl. And so that was kind of a lesson learned.
Absolutely. And then what happens too when you're sitting out there with super high rates, you feel confident you can get them. You're not necessarily looking at the data to suggest that you cannot actually get that rate this year, and you hold on to it as long as you possibly can and ultimately end up having your drop rate far more substantially and get a way lower ADR than had you just looked at the data and been more realistic initially.
Yeah.
Now, I know a lot of people are also probably pretty accustomed to looking at what other listings are doing. We do offer a pretty robust comp sets tool, which I think is really cool because you can kind of set up your comp set initially. And we give you the ability to filter down and look at similar reviews, similar amenities. You know, if your property has a hot tub, or if your property has all 5-star reviews and you only want to look at other units and what they're doing that have a hot tub and all 5-star reviews, then we allow you to do that. I think back in the day, people used to scour Airbnb and Vrbo, and it takes hours to do that kind of analysis. So I love that we still enable people to do, you know, a process that they're comfortable with, but make that a whole lot faster. So that is the other component of Pro. And I think what Pro really leans into is the concept that we used to think of dynamic pricing as revenue management. But what we all need to remember here is dynamic pricing is one component of revenue management, right? The other components include things like your marketing. You know, are you doing anything to drive your own demand, or are you completely and totally dependent on the demand that's coming in on Airbnb or Vrbo, right? Do you have emails going out? Do you have a direct booking site? Are you doing anything to get travelers to that site? What does your merchandising strategy look like? Are you taking advantage of banners for discounts on Airbnb or on Vrbo or on booking.com? What does that strategy look like? Is your direct booking website always the most competitive? Are you distributing everywhere you can be, right? There's a lot of sites at this point. It's not just Airbnb and Vrbo. But one thing I love geeking out on is, you know, is more better? And I am of the belief it's not. But you should always be paying attention to what is going to drive you the most money. Now, the reason I think it's not necessarily in your best interest to list on absolutely everything. Number one, that's chaos and a lot to learn and a lot to manage for you on top of everything else you're doing. But a site like Airbnb, for example, also gives preferential treatment to whoever is giving them the most calendar availability and whoever's doing the most bookings on their site. So if you're kind of spreading that out across several sources, then you're essentially becoming a jack of all trades, master of none, for a lack of a better phrase here, right? You're not going to be super successful on Airbnb. You're not going to be super successful on Vrbo if you're splitting everything amongst Vrbo, Airbnb, Expedia, Booking.com, your direct booking website, a local OTA, Bring Fido, whatever else might exist.
Yeah, I mean, I totally agree, and you know, it's the growing pains. I think it's a balancing act of how many platforms you should be on, because we take it for granted. There's a reason why Airbnb is so successful. Simple things like collecting the payment and processing the payment from the guest that's staying there. There's a lot of platforms that are large corporations that are still trying to figure that out. And so, you know, if you've got adding that to the mix, and now you're struggling with chasing down guests that have already checked out because they forgot to get the 3-digit code, security code to run the charge, then that's just a distraction, right? So I totally agree with you there. From experience, you've got to be very careful about how many different platforms you list on and be very selective with the ones that you choose to go with. So for that reason.
Yep. And reviews are going to come into play there too, right? So if you're kind of spreading your bookings across all these sources, your reviews are also spread across these sources. So it's always important to think, you know, where are reviews going to be the most impactful? Do I want this traveler to leave me a review on my Google site to strengthen my branding and my personal business? Or do I want this traveler to leave a review on Airbnb because Airbnb is controlling 70% of my bookings and it's going to have more weight there and help me more there? So I think review strategy is a whole other concept of revenue management, and distribution really plays into that.
Definitely. You know, one of the other things that, you know, I think is critical as well is, you know, it's not a set it and forget it, right? And so a lot of people kind of conceptually feel like once you've got your price optimization tool, you've got it synced with your listing. You've got your base price defined. You've got your discount strategy. you've got your dynamic pricing changing every day for you, you're done. And so, I'm a strong believer of making sure that you're constantly looking at that, looking at your results data, looking at your bookings compared to where you were last year, like you talked about, and kind of making decisions along the way to make adjustments, because it's not a set it and forget it kind of thing. You've got to kind of be monitoring and making changes as necessary. The Taylor Swift thing is a good example of that. A lot of people missed out on that 30 days in advance of those concert dates in a lot of the cities that she was in, because they weren't paying attention to it. So,
yep, absolutely. But then it's a matter of, you have 10,000 other things on your plate. Rich, you're such a great example. And I was learning a little bit more about your business before the call. You have a billion other things that you're doing. It blows my mind that you can juggle it all. So how do you make sure that when you're taking a look at performance, that you're not going down a rabbit hole, that you're spending your time wisely, because you need to be spending your time doing a variety of other things as well. So one thing I always like to consult with partners on when it comes to pricing is, how can you look at the reports that matter, take 15 minutes a week to do that, and take action where it's going to be most impactful, so that you can then use your other time elsewhere.
Definitely, totally agree. And I think it's, as an owner and as an operator of many short-term rentals, it's very hard. It's very easy to forget the importance of that. But if you don't have, a data-driven pricing tool to begin with, then you're basically shooting in the dark. And so a lot of that automation can happen and get programmed for you with that tool. And to your point, you can spend, some time, every other day, or at a minimum once a week, making adjustments to it for sure.
I was just consulting with a partner earlier. They have 300 properties and they come in 10 minutes every single week and they manage everything. And it's wild to me. Again, automation takes care of a whole lot of it. So a lot of it is trusting in the data and then customizing your strategy and making sure that's set up from the get-go. So that you don't have to constantly be monitoring and babysitting anything.
Exactly. Totally agree. So were there any other major points you wanted to cover before we get close to closing down?
No, I think that's pretty much it. I apologize. My signal's been crazy here, and that I turned off my camera and turned off that presentation. More than happy to share the presentation with anybody that might find it valuable. And I'm always happy to geek out on this kind of stuff with anyone. Like you said, I've kind of been in every aspect of this. Luckily, have not done housekeeping, because that is a whole new level of chaos. But I've been involved in a lot of other aspects of this business. Always happy to chat with anybody about it.
Please send us a copy of the presentation. I'm sure we make it available to everybody. And definitely, I'd love to have you come back, and perhaps we could spend a little bit of time on a demo of the product and kind of what it does on the next go round, and hopefully we make sure our Wi-Fi situation's not fall. It's on my end too, so I don't want to put all the blame on you. So I'm up on Lake Lanier in Georgia, where the Wi-Fi is not that great too. So.
Well, maybe it's a combo, but I do know they're drilling outside, so probably a good part of this is me. So I'll make sure that this is solid for our next go around here.
All right, awesome. I appreciate you taking the time, Kate. And for those of you that have joined, thanks for tuning in. B&B Investing Group, we also help new investors get started with short scalable business. And so if you're interested in learning more about that, we can schedule a call with you and see if you're a good fit or not. Just reach out to me on Facebook Messenger, and we can have that quick chat. But Kate, thank you so much for jumping on. Yeah, I appreciate you taking the time. And we look forward to seeing you again next time. And I'll definitely, so I told you who I use. I don't use you guys, but from what I heard today, it's very interesting. And so I'd love to take a closer look at what you guys do as well as an option for sure.
Absolutely. I'd love to take a look at your business and see where we might be able to optimize.
Awesome. Sounds good. Thanks a lot, Kate. You have a good 4th of July.
Thank you. You too. Bye, everybody.
All right. Bye-bye.
Thanks for jumping on the B&B Investing podcast this week. Please click on the subscribe and like button below For more trainings, property tours, and content, you can join my BNB Investing Facebook group by clicking below. If you are ready to grow your short-term rental portfolio and maximize your monthly income, you can click on the link below to schedule a quick strategy call with Rich or someone from his team to see how we can help or point you in the right direction. Stay tuned for our next episode and hope to see you on the BNB Investing Group podcast.